Hello everybody and welcome to Master Investor's Property Market Analysis webinar. We're very grateful that you're all able to join us this afternoon. With me is Kam Dovedi. Kam is the founder and CEO of Premier Properties. Now, Kam has over 29 years of property experience and is regarded as one of the UK's most influential and most respected property investors and developers. Over the years, Kam has implemented a variety of property investing strategies, which has enabled him to build up a significant multi-million-pound property portfolio. He now uses that knowledge, experience and contacts to help other investors and developers, both new and experienced, to take their property and their investing to the next level. So welcome, Kam.
Oh, thank you, Tim. That was a very nice introduction. Very kind of you. Thank you for having me.
You're welcome. I'm going to shut up now and let you get on with it.
Okay, great. So just need to share the screen. So as I'm sharing the screen, welcome. And I really want to thank you for spending your valuable time here. And I'm going to do my best. And as Tim is going to be doing his best as well, to really help you and assist you and really inform you and give you as much information as possible in this next 60 minutes. Now, one of the things I love about 2021 is it actually really is a new world when it comes to property investing. And if you're like me, it's about right now creating your own financial economy. Because of course, we all are aware of the fact is this horrible thing that's happened over the last year has affected all of us, haven't they? No matter who you are, you, me, all of us together. And you know, if somebody wasn't humble, you know, it's been a humbling experience for everyone, hasn't it? Sure, I hope you agree with me. And by the way, I'm not going to be just talking at you. Feel free to type in the chat box. I'd love to hear your comments, your experience, or if you're new, you know, questions. Absolutely fine. Feel free to join in. Hope I'm making sense. If I am, feel free to just type in the word yes if I'm making sense here for you. Okay, I can see your comments and questions coming up as well. Oh, brilliant. Okay, great. Okay, great to see so many of you here. So yes, like what I say, it's about this COVID-19, and of course, the fact is there's so many people that are losing their jobs. I mean, Marks and Spencer, 7,000 jobs lost, upper class 5,000, and so on. There's thousands and thousands of jobs across the country that are being lost because of this. And also the redundancies are at almost an all-time high, aren't they? Over 227,000 people being made redundant, and people living off the state, unfortunately, looking for the next job. And you know, people looking for the next contracts. Really, really drastic time. The peace of mind that you can have is right now, like what I say, it's a very exciting time for property and using property as a vehicle, like us at Premier Property, and you know, really using it to move forward in your life and create, like what I say, this financial economy. So my goal for you today is to really understand how property will work for you in the forthcoming recession, in this recession, how it's a real plus for you, and also how you can really learn to make your property investing recession proof. And to be fair, it doesn't really matter if you're brand new to property, because let's be honest, you're not brand new to life, are you? If you agree with me, just type in the word yes, you know, that's absolutely fine. And also, you know, if you're an experienced investor like me, you know, we all start somewhere, of course. It's about taking it to the next level. Yeah. So this is what we're discussing here today. And of course, we only got a short 60 minutes, and I'm going to do my best to share as much as possible. So what we're covering is this: the 4 quadrants of financial success according to Premier Property. Also, you know, should you wait or should you buy now? It's a key question I get asked when I'm training people in workshops and courses. And how do you actually genuinely move forward practically right now? How do you do it? Well, this is what we're discussing. And I do have a gift for you, because would you agree that property is all about completing what you start? If you agree, feel free to engage and say, type in something in that chat box. Yeah, yes, or whatever you think. Yeah, it's your choice. Yeah, also yes is coming through. So yeah, it's about completing. As a thank you for completing, you will be getting a gift from us here to really value your time. That'll be in the 60 minutes that are coming up. Also, now is a real big opportunity over the last, for over a decade at least, if not a lifetime. And I'll explain what I mean by this as we jump into these 4 key quadrants to your financial success. So let's do this together. Let's jump in. So the first part is to really understand the real property market cycle. the real property market cycle, what is really happening. Now, what I'm sharing with you here, just so it's crystal clear, there's no sort of, you're not going to get the economist's view. There's no legal tax advice. What you're getting here is what we do at Premier Property on a daily basis. So all I am is an investor developer. And as Tim said, I've been doing this for the last 30 years now. And, when I started with practically nothing. But, over time at Premier, we've built up systems and processes which you can, really use. And this is what we do. So everything I'm sharing with you is from our grounding on what we're doing today. We're investors and developers, and this is what we actually do. Here's when I started back in 25th of May 1989. Some of you might remember that. I wonder who can remember the interest rate. The Bank of England base rate back then was 15%. Shocking, isn't it? Shocking. Anyway, like I say, we've created lots of systems, and because of this, I do get a lot of Kam. You're a little bit different. You're very real, and I do get a little bit of get on with it. So that's what we're going to do. And because of this, I get invited, and I'm very thankful to be invited here today, by Master Markets to help you with this. There's lots of stuff. We get invited all over the place, all that. But like I say, I started with nothing, and my journey is in a book I'm an author of. It's not just my journey; it's actually lots of tips. It just happens the journey is just weaved into it because it's just the way it is. It's just real life, and because of this, I make my money from property. But it's important to know who's sharing information, isn't it? And because of this, yes, the financial freedom is there, but that's not it, is it? Because there's always another level. What do you do? Just because you're financially free, don't sit in a corner for the rest of your life? It doesn't work like that, does it? So my view is I like to share what I've done for myself and my family. Hence, I train people in an honest environment. I've trained over 200,000 people so far, just that you know who's sharing the information. And we don't train people in hotels. People say they find it very inspiring that we actually own our own training suite, which is a £2.6 million deal in itself. So when you're sitting in our HQ and you're training, you're actually in the real deal, if that makes sense. I could go on, but I won't. There's so many people that, just regular, normal people like us doing, great things. Just some of them you can see here right now in front of you. So let's now jump into understanding the real property market cycle. And I've explained how we're doing this. Now, here's the thing. Here is some extremely credible data. This is data taken from HomeTrack. Now, this chart is, of course, showing right in front of you 20 years of data. Now, feel free to take a picture of this. Like I say, this is from HomeTrack. I like HomeTrack. I find it very useful, very factual, very practical, because you may or may not be aware, over 70% of valuers use HomeTrack for their valuations across the country. Quite interesting, that, isn't it, really? So, like what I say, very credible data. And this is 20 years, 2 decades. Now, it gets even more interesting. So, of course, on the x-axis, on the horizontal, we've got 20 years. And on the vertical axis, we have a percentage of year-on-year return. Now, if you're watching this, that's great. If you're listening to this, even better. I'll do my best to explain it clearly. So you got percentage year-on-year on the vertical. Now, when you look at this chart, although we all are aware that the property market cycle tends to be 20 years, it's very interesting actually when we go in deeper. So let's go in deeper together, and I'll explain what I mean. Look at the first part of the graph. So the first part, the first 10 years, you'll notice there isn't just one cycle across the 20 years. There actually is 2 mini cycles, which are each a decade, each of a decade. So in the first decade, you can notice that the prices peak in terms of year on year. This is showing you year on year percentage increase or decrease in prices, in purchase prices of properties across the country. When I say country, of course, I mean England and Wales, because we've got to remember Scotland is a different country, different sets of data, just to keep it practical. So here, what we notice is that around 2002, the actual bar chart here peaks, and the year-on-year percentage increase is a massive 24.4%. Now, following on from that, the graph peaks, and there's also a decline in the market. So there's a trough, and that, of course, is in the recession in 2008. And we can notice here that looking at this year-on-year percentage increase, there's actually a drop of 12.5%. So there's a peak of 24.4, there's a drop of minus 12.5%. So, they are the key parameters, aren't they? Everything else, the prices move in between those two points. Now, when we assess the next decade, it gets even more interesting, because what we can notice, like what I say, is that you are finding that there's another property market cycle that's happening. So there's two of them, isn't there? However, this time it's so much less pronounced. Now, actually, you can track this back to the 1900s, and the very interesting thing is that it follows it follows the same pattern all the way through. Very, very interesting, actually, when you look at this. Now, what's the relevancy of this? Well, let's have a look at the second part of the decade, or really where we are now. We're into another decade now, but in the last 10, 11 years, where we are, what we can notice here is that the growth is less pronounced in this. So whereas in the previous decade, there was a peak of 24.4%, here, there's actually a peak of 9.8%. Now, this chart is the latest chart available from HomeTrack, and of course the data lags slightly. It hasn't factored in where we are right now in the recession. So if we can go by this chart just for a moment, if we use this data here, and we can see in the last decade the pattern of the drop of 12.5%, but the second part being less pronounced, would you agree with me that any drop is also going to be less pronounced? What are your thoughts? Just type it in, team. What do you think? Just using this particular chart, just for a moment, just this one chart here. What's your opinion? Just type in. I'd love to hear from you what you think, and I'll shout out something. So French is saying agreed. Isabel saying logical. Alan saying yes, higher percentage in first cycle than second cycle, absolutely. And David Ian Harrison saying yep. Number of you saying yes. Yeah, absolutely. This is what's happening. So what does this mean? How we can apply this? Well, what's really happening right now? Well, right now, our view is prices are likely to fall. Now, you might find that you're in a heated market right now. In fact, just before we started, Tim and I were discussing, Tim's based in Sheffield, and it's a very high price market at the moment. We'll discuss that in the next 5 minutes. So just stay with me here, okay? So Savills, according to Savills, expertise in the property field, they're expecting a short-term price fall of 5 to 10%. Knight Frank Research are also expecting a price fall of, they're quite bullish on this actually, when you think about it. They're looking at a price increase of just 3%, decrease even, of 3%. So a fall in the prices of further 3%. And according to us at Premier Property, assessing the data and the millions of pounds of deals which we have done, with God's grace, I'm allowed to say that, over the last 30 years, the data that we've assessed from all of that, and the information I'm sharing with you, our deeper assessment is that it's anywhere between 5 to 10% of a fall in the market from real market value. Now, in all of that information, the key is the keywords I said right at the end, the real market value. Because the truth is, the people out there, what should we call them? Let's call them the normal people. Yeah, because by now we understand that you and I, we are not normal, right? I'll explain. Would you agree that we're not normal? Who actually agrees with this? Just type in the word yes. Yeah, it's going to be this kind of webinar. Yeah, well, the normal people, and by the way, I'm a bit relieved actually that many of you are saying that you are not normal, just like me, so that's okay. All right, well, the thing is, what I'm sharing here with you, by the way, thanks for being so much fun. What I'm sharing here is that the normal people are not assessing real market value. They are overpaying right now. They have their reasons. Maybe it's emotions. Maybe it's the case that they don't know what they're doing. Maybe they haven't learned what to do properly. Whatever their reasons are, or maybe they're just thinking, anything's better than 1% in the bank or 0.5% or whatever it is. Maybe they're just desperate. Who knows, right? Who knows? But it's a heated market. We're coming to more of that in a moment. Yeah. So what we gotta, a key point you want to write down right now, please, is be aware of the real market value. In our view at Premier Property, new builds are not real market value. They're typically 25% more than, although they are market value, risk surveyors will say, and yes, they are, but they're not really, as momentum investors. Just stay with me here. So always be assessing real market value, because the drops from where we are right now, they're not really gonna be that large from our view and assessment over time. Now, you might think, well, Kam, that's all great, but past performance and all of that, how can it be brought into the future? Well, actually, I remember having the luxury of having a good conversation with Lord Mervyn King, the former Bank of England governor, of course. I get invited to Bank of England money to debriefs and so on. And I remember something that he said to me is really ingrained in me. I want to share it with you right now. And what he said to me, and like what I say, it's ingrained in me, is one of the reasons we have economical cycles is because the younger generation, actually, younger generations, his words, forgets what older generations have learned and experienced. And I thought, that's actually quite interesting, because in my view, as an active investor developer, and I know a number of you are active investors and developers, maybe you can relate to this. And if you're new, that's fine, feel free to get the experience. What he's saying is, isn't he, right? That past performance does repeat itself, but people forget about it, or they don't know about it. Yeah. Are you following me here, team? If you are, just type in the word yes. If I'm making sense here for you, yeah, just type in yes, or anything you like. Yeah. So that's the thing. So how does this apply to you? Well, it's all like what I say, it's about understanding the real property market cycle. And the time that we have, we've just gone through some of this right now. And now I'm going to share with you the second part of the 4 parts of the quadrant at Premier Property for financial freedom. How can you actually do this? The second quadrant is all about getting massively discounted property finance opportunities right now. Right now, there is massive opportunities where you can achieve discounts from properties that are just market value. Kam, what the heck are you talking about now? I'm going to explain in the next 5 minutes. I'm doing my best to give you as much info as possible. However, we've only got, how much time we got left? Not too long. Yeah, we're already 18 minutes in. Now, for those of you who actually are enjoying this and you want more information and you want to spend more time with me, I'm actually doing 4 evenings, a 4-part workshop in the evenings between 7:30 and 9 p.m. If you would like to register, you're welcome to come and hang out with us, come and join me, and I will share even more info with you. And here it is. You can register right now. There's a link going in the chat box. So as we're going through this presentation, feel free to just click on the link and grab the opportunity. There it is for you. There is a value to it. It should be a price for it. But as I've been invited here today, it's going to be absolutely free for you. So there it is. Okay. So we're going to carry on and discuss further. So what we're discussing here is finance. So financing opportunities. Now, before we get into the financing opportunities, we've got to understand, the relevance of these financing opportunities and the massive opportunity that there is. So have a look at this chart. Now, this chart is actually showing you house building completions over a period of time. And what we can notice is that every time there's a peak in house building, so Q2 1990, house building peak, and this chart that I'm sharing with you is by Peel Hunt Woodford. Peel Hunt Woodford, hedge fund managers in effect, really good, credible data. And you can notice house building peaks in 1990 Q2, the highest building peak is followed by the recession. And it happens again. 2008 Q3, house building peak followed by a recession. And look at where we are right now, 2021, house building peak. And of course, we are now confirmed that we are in a recession. By the way, this chart I've been sharing over the last 7 years, and every time I share it, it works. Shocking, isn't it? When you know what to do. Yeah. So Rishi Sunak, whatever you think of him, the chisel cut chin, Rishi Sunak, doing various things for the country. He's already outlined, isn't he? 15th of January outlined there's a severe recession, and we're aware of this. However, there's also a mention of a double dip recession. So What does that mean? And why is this a massive opportunity for you? And how does this apply to finance? So let's discuss. The recession is different because we all know in lockdown, we've all been forced, haven't we? Not to work, not to be going out there, not to be using leisure, not to be going to the pubs, not to be going to restaurants, all of that. We've been, really been forced not to do that. So GDP has dropped by 20.4% back in 2020. However, because it was a forced situation and now they've unleashed us, it's a little bit like this. It's like an elastic band, if you use my analogy. It's been forced, that's the economy, and now it's like that. Now we're being unleashed, right? So what does that mean? How does that apply to property? Well, look, 2021, the forecast is well over 15% in GDP increase, and which means that you have a massive opportunity, because when employment levels return to pre-COVID, you are going to find that finance is going to be going up. It's already being talked about right now. Trust me, when all the experts out there say in their chocolatey voices, nothing is going to go up, finance will be absolutely low for a long time. Trust me, as an active investor, developer, what you'll find is the opposite happens. It goes up. If you agree with me, type in the word yes. If you don't agree with me, you can type in what you like as well. That's absolutely fine. Just type in whatever you think. You see, it's already being discussed right now. So right now, my view is for you, you have this short window of opportunity where you can learn how to do this properly. And if you're learning already, well, next level, scale your business, you can really jump in and, really make this work before, let's be honest, before it's too late. 2021, massive, massive opportunities. So let's now discuss that. Let's discuss the massive opportunities when it comes to finance. And it's all about leverage. One of the things I love about property as a vehicle is that finance is what really makes it work for you. One of the things. Second thing is taxes. Great ways, because tax is a choice. We'll cover that on another day. But leverage, you can really leverage finance, can't you, right? Mortgages and so on, finance. So it is really a case of maximum output with your minimum input, which is one of the things I love about property, like I say. And right now, the Bank of England base rate, you may or may not be aware, or you probably are, it's 0.1%, isn't it? The lowest level in my lifetime, in your lifetime, since the bank began. It's nuts. I mean, if someone said to you 10 years ago that the Bank of England base rate is going to be 0.1%, what would you have said to them? Just type it in. I'm interested to hear. No need to be shy. Let's do this together. Just type it in. What do you think? I can't read that out, what you just said there, because that's a little bit naughty. Yeah, Bash is, yeah. Right, yeah, you get my point, right? So Bank of England base rate, 0.1%, lowest level since 1694, and here it is. Let's assess this. The fact is, this is over 100 years of credible data, 100 years plus. And what we can notice is, very important parts, is that normally the rates actually normalize anywhere between usually 6%. There's a support level at 6%, and there's also a resistance level at around 8%. So my point is, Bank of England base rates usually normalize around 6 to 8%. Right now, what we've got is shockingly good. And unfortunately, there's a lot of people that are going to miss out. And to be fair, my view is 2021, if they don't get in right now and don't really learn how to do this properly, they are going to miss out on massive opportunities. Here are the mortgage rates you can see in front of you. This is the residential rates for up to 75% loan to value. And as you can see, extremely, extremely low rates available to you right now. Now, you might be aware of this, you might be doing something about it, and if you're not doing something about it, well, let's jump in and learn how to actually apply this. But I do want to share with you the massive significance of this. Now, what I'm about to share with you, you're not going to find anywhere, to be fair. You're not going to find it on Google. You're not going to find it in any Bank of England money debrief. You're not going to find it anywhere. This is according to Premier Property. Let me share with you. And we call this the reality check. So I'm going to go through this quickly, but just imagine that you are borrowing £100,000. You're borrowing £100,000 for property, and let's take the kind of the average interest rate of residential properties right now, which is 3%. Yeah. Now commercial a little bit higher, but let's just average it at 3% for an investment property. So £100,000 borrowed right now at a very low rate of 3%. Now that means that you got an interest payable. The interest element is going to be £3,000 per annum. Yeah. If you're agreeing with me, just let me know if you're agreeing with me here, if this makes sense. Yeah. So that's what it is. So now, what happens when rates normalize? Well, let's have a look. So the £100,000 borrowed right now at 3%. You might want to write this down. Just write it down. 100,000, 3%. Interest is £3,000. Just to summarize. Now, when rates normalize, so let's say they go to that between 6 to 8%. Let's be a little bit conservative. Let's call it 6%. Just make it, keeping it real. Yeah. So let's say the Bank of England base rate goes to 6%. Even if it's a little bit lower, to be fair, the actual lender will be charging you around 6%. Yes, you get my point, right? So 3% now jumps to 6%. That same £100,000 borrowed is now interest of £6,000 that you're paying in a year. So it's gone up by double, hasn't it? It's doubled, right? Yeah, for that same amount of money. So let's now come back to now. Let's come back to here, and let's just say, just for a moment now, let's consider the amount of interest that you will be paying when the rates actually increase to 6%. Yeah. Right now, let's say, how much would you be paying? So you'd be paying £6,000. So what do you get for £6,000 of interest paid in today's money? What do you get? What kind of percentage do you get? Well, £6,000 in interest that you would pay now at the interest of 3% means that you are actually borrowing £200,000. Whereas when the rate goes up to 6%, you will only be able to borrow £100,000. Hope I'm making sense here right now. So are we then saying, if we are borrowing that money to actually, you're borrowing that money and you're putting it into property, you're leveraging finance. So does that really mean then that in real terms, that every single property right now across the country is actually really 50% below market value? You've got to learn this stuff, team. Massive opportunity to move forward. We have the once in a century, I believe, the once in a century property gold rush happening right now, where even market value, when you think of it like this, in terms of the finance, the property is really, in real terms, is 50% below market value. Something we can discuss further over 4 evenings. So let's now discuss, what do you look for? So what do you do? What do you do? Everyone is overpaying the prices. It's a very heated market. Who's actually finding this? Who's finding that the market right now is heated? Just like, type in something. What are you finding? Let's do this together. Yes. Isabel's coming in. Yes, lots of yeses coming through. Yeah. Well, what do you do? So this is what we do at Premier Property. We look for distressed properties and distressed sellers. Heated market. Let's discuss this first. Well, look at this. This is figures from ONS, and the assessment you can find here is that average house price in the UK is increasing by 9.1% year on year. Of course, this is across the board, and we do focus on specific gold mine areas, we call them at Premier Property, but across the board, it is 9.1%. And also, look at this. Areas that had never really seen any growth in short-term periods are really growing right now. The northwest of England, 11.9% increase in the year to February 2021. The most recent data, according to ONS, it is shocking what is happening out there. And it does reminds me of one of my favorite quotes by Rudyard Kipling, where he says, if you can keep your head when all about you are losing theirs. It's true, isn't it? Yeah. Unfortunately, a lot of people out there aren't assessing it like this. They're not on this webinar. They're not watching this. and they're normal people. Yeah. But as we clearly realize, we are not normal. Yeah. So my view is right now, you got to keep your head like we do at Premier Property. On a daily basis, I have conversations with my deal sources. Oh, Kam, the prices are going up, Yep. Can't get any deals. How many did you get in the last month? Oh, I got 3 deals in the last month. Okay. Well, yes, you can get deals. Oh, yeah, I did. I got the deals. Yeah. Well, but we're not buying everything. You're buying what's really good and where the numbers work. Just write that down for yourself. Numbers, right at the beginning of anything. Now, the thing is, it's, if you're like me, you're kind of a very emotional kind of person. You can't help but get emotional. Yeah. It's so exciting. There's a lot going on. However, the numbers will keep you grounded. Are you following me, team? Hope you are. So there are, there are a lot of high price items out there. A lot of gazumping going on. Agents, selling properties very quickly. But you can learn all this stuff. You can learn how to deal with estate agents correctly, effectively, right agencies, all this kind of stuff. In fact, I'll be covering that over the 4 evenings anyway, for those of you who are joining me. Now, there are 3 things that are in your favor though. In fact, you have the optimum market conditions right now, the optimum. Yes, you're hearing me correctly. So let me share these 3 specific market conditions with you right now. So we've discussed, haven't we, understanding the real property market cycle. So I've gone into a lot of detail with that in the time that I have. We've also discussed, the massive discounted financing opportunity, which is something I don't think many people out there are assessing. And we've actually put some practicality to that in terms of market value prices. Quite interesting, isn't it? And now, we're discussing, how, you can buy distressed and, distressed properties and how you can actually make this work. And we're going into the 3 market conditions. So let's jump into these. So the first one, and these are the prime. When you get all of these 3 happening together, you have the maximum opportunity that you're ever going to have in property and real estate in this country, in our country here right now. So the first one is high uncertainty. Would you agree with me that there's a lot of people out there where they are very uncertain on what to do? If you do, type in the word yes. People don't know what to do with the money in the bank. What should they do? Should they put it into a buy-to-let? Which area should they invest in? Or should it be a commercial property? Should it be semi-commercial? Or should it be an industrial site? What do we do? What happens? What do you do? There's a lot of confusion out there, a lot of uncertainty out there. Will the figures go up? Will the rates go up? Will they go down? What the government going to do next? Is there going to be another lockdown? Is there not going to be? There's so much confusion, isn't there, team, right? You only got to turn on the media, haven't you? And you hear it all. Yeah. There is an extreme high uncertainty, which means for all of us as entrepreneurs in this, you can find, like us at Premier, the certainty within the uncertainty. And one of the things, what I love about getting this certainty is facts, knowledge, specific information in the field that you want to move forward in so that you know what to do. So just like Rudyard Kipling is saying, while others are losing their heads, you keep yours. And in my view, not just in my view, the fact is, information really helps with it, specific information. So that one, you can tick that one off if you think about it, as long as you get the information. The uncertainty becomes certain. Exactly what we do at Premier Property right now. The second one is fear. There are people out there that are so fearful of losing out, fearful of, the fact that they've even sometimes got a deal. Fear. Now, the more fear there is, fear about COVID, fear about, what's going to happen next, a lot of fear going out there. If you agree with me, just smash that button saying yes. Let's type it in right now. Yes. Yeah, a lot of fear going on. Yeah. So the fear, let's keep it real. From my perspective about fear, the fear never really goes away, to be fair. The fear never really goes away. There's always an amount of fear. If there wasn't any fear, would you agree with me that we wouldn't be human, would we? And we are human. So from our perspective of sharing with you, it's about reducing the fear. if you can get into a situation like us, where you can reduce the fear by information, by guidance, by people sharing info who are actually doing what they're sharing, your fear will reduce, won't it? Yes or yes? There comes a point when you've got to jump in. Yes or yes, team? So fear can actually be reduced, and it's actually a key driver for people like you and I, where to actually move forward, where you can reduce the fear. The third one I want to share with you is confidence. Right now out there is a lot of low confidence. Again, the economy, unfortunately, a lot of people losing their jobs and all the stuff I shared with you right at the beginning. There's all of that happening. And there is a lot of low confidence. People don't know which way to go, what to do next, which property strategy to actually choose. People don't even know that there are property strategies. By the way, I'm coming to that in the next 2 minutes. I want to share with you some of the property strategies that are available in the time that I have. Okay, so high uncertainty. Hopefully you've written these down. Let's just summarize these. High uncertainty, extreme fear, and the low confidence are your 3 key factors that will allow you to be successful, as I'm explaining it right now. I just want to touch upon confidence and give you something even more specific. Now, at Premier Property, what we do is we gauge confidence between 1 and 10. So when I started in property, my confidence level, if I'm being completely honest with you, was a 1, because I come from a very, very working class background. Some will say a poor background, but a very honest background. And I suppose the truth is, you got to learn to become wealthy. You got to learn how to do this. And that's what I've done. Now, when I started, my confidence level was a 1. If we're measuring between 1 and 10, at the age of 25, my confidence level went to a 10, because I became financially free and the money was there. Cut a long story short, at the age of 25, I'm being completely honest with you, it was this factor, I thought I was invincible. At level 10, that's what people think. But the fact is that we are not invincible. Do you agree with me, team? Type in the word yes if you agree. And that was the first time I lost all my money. Had to build it back up again. Just knew that there was systems and processes on how to do it. So what I do now, learning from my mistakes, and now what I like to do is I like to learn from other people's mistakes. So maybe you're doing this right now, right? So what I do is I keep the confidence level at a 9. Very important for experienced investors. Very important that we keep our confidence level just 1 notch lower. The reason being, what we do is we're always assessing every single deal that we do, everything that we're checking, making sure that we're doing the right thing, and then you jump in, right? So what we do is we keep our confidence level at a 9. Hope this makes sense, by the way. So if you're at confidence level 1, 2, 3, wherever you are, 4, you now know that you need to do something about it, right? And if you are at a level confidence 10, it's time to notch it down a bit, if I'm making sense here for you. And by the way, financial freedom isn't it. Trust me, I'm living this stuff. There's more levels of freedom. Just make a note of that. If you're an experienced investor and you've got that financial freedom, I will share that with you. Just remind me on another day. And if you haven't got your financial freedom, well, it's time to hurry up and let's make it happen. Now's the time to do it. 3 parts. There it is. High entrepreneurial market conditions right now. Now, it gets even more exciting. Look at this. The recession is the fact is, and these are all facts, aren't they? The recession is a once in a decade opportunity. Brexit is actually helping. Yeah, Rishi Sunak has put most of north of England back on the map with the amount of billions that are actually being pumped in. Yeah? And manufacturing is coming back, isn't it? It's coming back to our country, right? Tax changes, they're going to happen 2023. You've got a 24-month window to actually do something about it, which doesn't mean just implement, in 24 months' time, because that's going to be too late. Property is slightly slower. You know this. You got to learn what to do, and then you got to apply it, haven't you? Yeah. So there's that. Increasing regulations and legislation, the fear factor. But like what I say, you can reduce your fear when you learn what to do. Very easily doable. Lowest interest rates. We covered this, haven't we? Right? Yes. If you're with me, we covered the lowest interest rates, Bank of England. We know that that's there now. And also there are lower values and discounted deals, and it's all about creating really quality relationships. Yeah, something that we can discuss on another day? How do you deal with estate agents? How do you get deals? All this kind of stuff. Also, the fact is, you can get in now, you can buy now, and you can really set yourself up for life. You have the opportunity of doing this right now in 2021. And the fact is, you have all the help that you need to actually get it right. Tim, myself, the team here, that's what we're doing, aren't we? So if you're listening to this or you're watching this right now, well, you have all the help that you need to get it right now. Massive, massive opportunities. So let's now that we discussed 1, 2, 3 parts of the 4-part quadrant of financial success, let's jump into the 4th and final part very quickly. 2021 is the year where everything has changed. The way business is conducted has changed. COVID has changed everything. And it's very important that you have the correct strategies for 2021. In fact, at Premier Property, we have a strategy pyramid. This Premier Property strategy pyramid that you can see right now, within this, there are 10 specific strategies that I'm personally applying in our companies. We're applying these strategies, which you can apply and make 2021 your year of success if that's what you want. Now, I know we've got acronyms on that. Be rest assured, for those of you coming along with me on the 4 evenings, I will be going into depth of not all 10. We won't have time to go into all 10, even though it's a lot of info over 4 evenings. We will go into 8 of these specific strategies that you can apply and make work for you. And here, I'm just going to give you a quick whistle-stop tour of the kind of strategies and the kind of real-life case studies that we're doing and you can do. And remember, I will be sharing more of this over the 4 evenings. In fact, these case studies I'm about to show you right now, I will be covering each one of these in much more detail in terms of the strategy and what the deal is. And I might even show you a bank statement or 2, because it's always good to have a bit of proof, isn't it? Yeah. So, here they are. So here are some live case studies. Number 1. So this is Victoria Road. This is in North Kent. Purchase price 130,000. We sourced that one, £5,000 in for just finding it. Here's another one. This is Charlton Road, East London, E6. Look at the address is there as well. Value right now, just been valued recently, 445,000. You got to learn this stuff, team. If you don't know how to do this, you got to learn this. Live case study number 3. This is in another part of Kent. This is a purchase price, 105,000. Very easy entry levels with infinite return. I will be sharing, like I say, over the 4 parts, how we did this and what you do and all the rest of it. Live case study number 4, semi-detached house within PD, using PD on residential. We created £31,000 uplift with a very easy project where time invested 7 hours. I'm not saying the project was 7 hours. I'm saying your time invested is 7 hours. Really, really cool stuff. Case study number 5, 2 HMOs, earning around just under £30,000, which is the average annual UK salary. Shocking. And they're just two little properties. All of these strategies I will be sharing with you, by the way, over the 4-part series. The link's in your chat box. You can grab it right now for nada, for free, just to honor you. Here's another one. So it's a development, 3 flats, £250,000 profit. I mean, these are real numbers, if you just imagine. Case study number 7, this is one is in Essex. So this one, purchase price 340, uplift of 70,000. £70,000. It's shocking what you can do with property. I mean, my mum, she used to have to work about, that's like 8 years of her salary. She was a clothing machinist. It's shocking what you can do with property, isn't it? Yeah. Live case study number 8, development, so you can go larger. So this is £1.5 million. We could go on and on, but I won't, just to give you a bit of a flavor of the type of deals that you can do. And here's the thing, how you can actually move forward. 3 things. Please write this down. You need your specific goldmine area. You need it. Yep. Scattergun doesn't work. Your niche goldmine area, please. Secondly, you need the correct strategy for your area and for you that will work for you. So you can move the obstacles out the way and actually get results. Because this is a results-oriented business, isn't it? And thirdly, you need someone to share with you the practical steps on how you can really make this work. Because this is how it works, right? And yes, you can create your financial freedom, and you can create the next levels of freedom as well. So I hope you really enjoyed this presentation. I've done my best to give you as much info as possible. In front of you, you have the links. You've got the page there. You can take a quick photo. I'll shout it out once. I know Tim's going to come back now in a moment. I'll just shout it out very quickly for you, just in case you're listening to this, maybe on YouTube or a podcast as well. So the link is bit.ly/, always get that one mixed up. That's just below the question mark, isn't it, that one? Right, / M for Mike, M Mike, F P 45. Okay, so there you have it. Click on that link, come and join us, and I will continue to share more information with you, because let's be honest, I love doing this. I make my money from property, but if I can be an instigator in your journey, brilliant, job done. Thank you very much for listening. I believe Tim's going to come back now, and we're going to do, I believe we're going to do a Q&A, right? Is that right, Tim?
We are indeed. We are indeed. Thank you for that. That was really interesting. We've got a number of questions have been coming in, and if you've got a question, please do submit it via the Q&A. First one from Nadeem. Nadeem asks, when do you expect the price drop to occur? Now, I realize you can't be overly precise on that, but do you have a feel for when you think that might happen?
Oh yeah, Nadeem, that's a great question, by the way. I mean, I get that question asked so many times. So the thing is, we don't actually have a crystal ball. Yeah. However, I don't know why. It's shocking how right we get it. I mean, I say it's shocking. Nick, one of my team here. Nick, what do you say? He's here with me.
Impressive.
He says it's impressive. Right. Anyway, to answer your question specifically, there are some key dates that you want to be checking in on. And the date that you want to be checking in on is the 30th of September, 2021. Because 30th September 2021, there's a number of things that are kicking in. Furlough is coming to an end. In fact, right now, employers are having to be, you may or may not be aware, right? But employers have to pay pension contributions. They have to pay part of that furlough right now. So if they don't need those employees, unfortunately, they're going to go to the wayside. And 30th of September is a key date for that. Secondly, the bounce back loans. The payments, for those people who've borrowed on bounce back loans, the payments are going to now start to kick in. People are getting letters, emails saying your payments are coming in. And remember, it's not interest only. They've actually got to pay the capital as well. So what my point is, there's a large amount of capital that's going to be required. I'll speed up the answer, right? There's that as well. Yeah, on top of that, stamp duty. There's that as well. In terms of finance, like I've shared my view, potentially they're going up. I say potentially, that's what I'm hearing from the horse's mouth, the Bank of England. So there's all of that going on. So there's a number of factors that are actually moving in the direction of a price change. Now, in my experience, when it changes it fast. So the people, unfortunately, who aren't learning how to do this properly, they're really going to have some of them are going to be, unfortunately, in negative equity because you don't see it coming. But people like us who get this, who learn this, we're keeping ahead and we're keeping numbers. Now, having said that, past 30th of September 2021, it is a time to decide where you want to, if you want to pivot on the prices. Because after 30th September, if the prices are still increasing and it's still a heated market and there's no change, well then it's time for us to realign our prices. And that's okay, because we've been doing that over a number of years, haven't we? Yeah, prices were here, prices are here, you're buying here, you're buying at a discount, prices move up, you still buy at a discount, but you've had to realign. So, hope that answers your question, Nadeem's question there. 30th September key date.
I think you've indirectly answered a number of other questions as well.
Oh, okay, I do go on. Excuse me.
For example, we had George was asking about sort of potentially the impact of the end of furlough and what have you. And I think we had a question submitted just a second ago from Michael, who was asking when you'd expect things to bounce back. But as you say, from sort of the end of September onwards, that's the time to make a further assessment and decide how you want to proceed. I've got an interesting question here from Anne. I'm going to read this out. It's multiple choice, but you're going to have to listen to the options carefully here.
We'll have a go.
If you could buy a single property this year, what sort of thing would it be? You can only pick from a 2-bed renting out to young professionals, a lump sum into a property portfolio or diversified property fund, possibly not Aviva, the way things are going at the moment, a purpose-built student accommodation near a major university, or option 4, anything else.
Okay, great question, Anne. And I like the way you're thinking there. I like the multiple choice. That's interesting. I would say for you, no one can actually do better than you controlling and running your own business. Yeah, some form of fund, whichever type it is, they're going to cream off the management. They're not going to do as good a business or make as good business decisions as you will. Coming back to your scenario of the student accommodation, well, who do you want to be? Do you want to be the person who's actually developing, or do you want to be the person who's buying these things where the developer's maximized on it? So my answer for you is, if I'm choosing from one of those, it would be number one. Number one for sure. Having said that, you need more spots on your multiple choice, because there's several things that you can be actually doing.
So I think number
you
one
can actually do.
That was the option of the renting for young professionals option, wasn't it?
Oh, the renting for yeah. So was that? Could you repeat that one, please? Just that line.
Yeah, so I think Anne's option number one was the buy-to-let for young professionals.
Buy-to-let for young professionals, yeah. So you doing that for young professionals, absolutely fine. But like I say, I'm trying to answer your question directly. Your multiple choice needs more questions on there, because you can do a lot more. But number one, from the choice that you've given directly answering your question, that would be, in my opinion, the best.
On the topic of funds and what have you, I think the recent news about Aviva's property fund being closed, I think people struggling to get the money out for the next 2 years is highly topical. I suspect we'll be talking about that further in the future. Now, I've had another question here. Just let me pull it up from the Q&A. So Michael asks, how would you hedge risk of being out of the UK housing market? Would you buy UK house builder shares, for example?
Yeah, that's interesting. So it really kind of marries into the point I've just discussed, really. In my view, nobody is going to run your business better than you are. So why would you put your money into someone else's hands where you can quite easily? Now, you might need to learn this. Yeah, that's normal. In any industry, you got to learn what to do, but you can do that. That's okay. That's available to you. So why would you put that money into some kind of shares when actually it can be your own shares in your own company, investing yourself, and which you can do with a minimum time, to be fair.
Fair enough. We've got a number of questions, particularly about London. I guess that's possible because we've got a fair representation from London. So Noel, for example, says, London is a bit of a disaster right now. That probably means it's an opportunity. However, Article 4 has made it impossible to force yield. Might an option be to get high street property, which is also currently a disaster, ground floor commercial, first and second floor residential? What do you think?
Great question. And quick answer on that one is London, yes, you're quite right, is a massive opportunity. At Premier Property, we've got 4 different areas. I live in London, but we also invest north of Watford as well. So, we've got, and each of these specific areas is like, it's like a different country, actually. That's what it feels like, and what you do in them is different as well. So you're quite right. In terms of Article 4, we don't do Article HMOs and so on in Article 4 areas, if that's what you're talking about. In London, for example, we will do that north of Watford areas. Buy-to-lets, we do in north of Watford areas. But in London, I mean, there's massive opportunity right now, and I'm very, really excited about this, because there's so much you can do where you can stick 2 fingers up at the planners in the direction that you would like to. Right? So specifically, PD opportunities are massive, and you're quite right, there's a lot of stock available. And whether you want to help people or you don't want to help people, and if you're like me, you want to help people, if you don't want to help people, you can't help but to help people, because it's the nature of the business that we're in. What do I mean? There are so many opportunities where on secondary parades and tertiary parades, there's so much stock of retail and semi-retail, semi-commercial type of accommodation that you can bring back to the community. And you make money from it. So specifically, PD rights. So such as, you may or may not be familiar with these. I'm just going to shout them out, such as Class M, my favorite, which is expiring in July, but being replaced by Class MA. We got Class ZA. You can definitely stick 2 fingers up. You can stick 4 fingers up at the planners on that one, right? You got your ZA, you got your AA, you got your AB, you got, there's great things that you can be doing right now. Class O on its way out, but that's okay. We got Class ZA. So there's so much that you can be doing within Premier Development. If you're thinking, what the heck are you on about? Just come and spend more time with me.
And you keep answering these questions before I get a chance to ask them.
Oh, Tim, oh my God. Yeah.
I had a question from George asking about permitted development rights. I think you've sort of touched on that already, so I'll choose another one. We've got a number of questions asking around if you've got a sort of a limited business and sort of the best structure for a portfolio and that sort of thing. So Stephen, for example, says, can my limited company avoid paying stamp duty if we purchase the limited company that owns the target property we are considering, as opposed to buying the property itself from the company?
Yeah. Well, so quick answer on that one is, now I'm not a tax advisor, but I've spent a lot of money with tax advisors and accountants. And what I've learned from them, I'm happy to share with you, is it works in an interesting way. So all I'm going to say to you is there's another way of doing it. Legally and correctly, and none of these jiu-jitsu strategies like offshore and all that kind of, I shouldn't call it nonsense, but none of that kind of stuff, right? Real stuff that you can actually do practically, which is on the right side of HMRC, because you always want to be on the right side of HMRC, right? So answering your question specifically, look into good tax structures.
Yeah.
Holding companies and tax structures. We need more time together. I can't really explain that in 2 minutes, but just something to get you started on.
Great, thank you for that.
Yeah.
Got a question from Shantha, who says, can you give details of what and how much and how to get capital allowance benefits in service accommodation lettings?
So capital allowances, we actually have a specific service accommodation business, which I train people on how to do as well. With that one, if you're renting and then re-renting, it's not really yourself that can gain that capital allowance, it's the actual landlord. So if you are the landlord, then that's something that you could look on claiming the capital allowance. Practically, what you've got to be aware of is there's going to be some cost of doing business to actually claim that capital allowance. So what you really got to be aware of is it worthwhile you actually doing it? So if it's one property, or 2 properties, it might not be worth doing it in real terms. However, if you've got a sizable portfolio, then it could make sense for you to actually gain capital allowances. So you can, but you got to really check the feasibility, the viability of it, let's call it. Yeah, the viability of actually doing it. I hope I'm answering your question directly. Yeah. Yeah.
I think we've probably just got time for maybe one more. I think I've got a question here from Carlos, who says, if I have a deal, could Premier Property help with finance?
Yeah, Carlos, the answer is yes, but I'll give you an honest answer. I get so many people sending me Rightmove links and so on, all that. They haven't trained with us. They don't really know, no disrespect to them, but they don't really know how to actually assess a deal and how to actually present it. So when people train with us they work with us, then the answers are very easy yes. But until then, the polite answer is you got to learn what to do properly, and then the answer becomes yes.
Thanks very much. That has been fascinating. I apologize to anyone whose question we haven't got to. We have got quite a lot of questions. So if you've submitted a question and we've not addressed it, I'll try and pass the details on, and maybe we can return to that at a future date. So just to wrap things up, we're sort of bang on the hour. You can see on the screen here, future events, future webinars from Master Investor. So we've got the Bond Academy with Wise Alpha, looking at introduction to corporate bonds on the 10th of June. We on the 30th of June, in collaboration with Net Wealth, we've got super forecasting for the next 5 years, looking at the macro trends that matter for investors. And then on the 15th of September, we're probably going to take a little break over the summer. On the 15th of September, we've got Jim Mellon himself providing you with an autumn update. The only other thing I would draw your attention to, if you're not already aware, is that the Master Investor Show 2022 will be held on the 19th of March. We are very much looking forward to seeing you all, getting back into seeing people face to face. As great as webinars are, I think we've all missed that. So tickets are available. You can get them from the Master Investor ticket page on Eventbrite. For anyone that can't read that, it's masterinvestor2022.eventbrite.co.uk. Last thing to say, you can see all of our future events and sign up to any that are relevant on the events page, which is events.masterinvestor.co.uk. You can sign up to our newsletters for news on property investment and any other forms of investment for that matter on masterinvestor.co.uk. And if you have questions, if you have any feedback for us, please do let us know. You can contact us at info@masterinvestor.co.uk. So all that remains is to thank Kam once again for a very interesting session. I hope we'll speak again soon. I hope the rest of you have a great afternoon. Thank you.